Hello guys, today we talk about Singapore Airlines financial results for the whole year. So before we get into the details, my recommendation at this moment is hold. I'm not a strong buy and also not a clear sell. So we will talk about why we reached such conclusion according to their financial report. First, if we check out their stock price at the moment, which is 0.09, and then when they release the financial report is about $7.9, so up from 2.8% from the time when they released the financial report. We start from the positive. We can see that it actually posts a record annual profit of 2.8 billion Singapore dollars. And another good news is that their staff can also get 7.5 months bonus, which is pretty good. But if we really look into the details here, we can see that the operating profits drop significantly with a 37.3% decrease, which is $1 billion loss over the last year. That really contradicts the good news of the annual profit with 2.8 billions. And so what makes the final profit to get like 3.9% increase? That is something that we have to look at. But we can see that as the operating profit drops, so certainly it is not really, the increase is certainly not really driven by the operational performance. And if you check their news release, they actually, this net profit actually boosted by one-off non-cash accounting gain of 1.1 billion from the Air India restaurant merger. So it's actually the one-off merge process with the Air India, which is, you are not going to see this again in the next year. That's something that you have to concern. And another thing is, if we look at the total expenditure, so mostly this 1.1 billion loss is caused by the non-fuel expenditure, which their loss increased by 11%. And that's it. We have to check why we have such increase of cost. So we can imagine a major factor might be the inflation that raised the cost of labor's maintenance and all other operational scenarios. But also, if we really look into the operating statistics here, we can see things are quite good. We have more passenger carries from last year, and then we have more revenue passenger per kilometers. So the bad news is that the load factor is actually dropping compared to last year, and then the passenger yield is also dropping. So that means they have more capacity, but they don't really fully occupied. So as a result, the cost per passenger really increasing. So that really, I think that's kind of the main. And also in the QA section, they also address the cost concern. They talk about, also in the QA section, people talk about the passenger yields, which is come down on the full service airlines. And then they talk about that the passenger yields are still moderating, but that moderation is coming down. The decline against previous year is less than in the earlier months. That means the decline is like going to the good side. So I think they expect it to be better and better. Well, I mean, there are risks and then opportunities here. Some other people ask about the unit cost as well, and then they say that we have very strong cost management measures to try and contain to the extent that we can. So I think they are pretty confident that the cost is manageable. And some others talk about the number of passengers, and then they mention China market is still growing. They expect the China market will still going to recover to pre-pandemic level, which is have more in the future. So something I feel quite good is that when I look at the cargo performance, it's actually increased a lot in terms of the percentage, which is 16.3% increase. But it's important to monitor the potential impact of the U.S. tariff that could the effects of the business between different countries that cause the cargo probably drops. So that is something I have to be concerned. And although it's not the major contribution to the revenue, but it's that this increasing so significantly. Okay, let's consider their investment in AI. So the detail provided are somewhat vague. For example, they train employee to use AI, but isn't really meaningful from investment perspective. And in terms of the partnership with Salesforce, so if you work in AI, you know that Salesforce is pretty weak in AI technology, and then they don't have their physical chips. In terms of the partnership with OpenAI, I read their news announcement. Actually, when I check the details, I don't think OpenAI will help them to build a customized model, but instead, OpenAI might offer them some discounted API credits for them to use. So the key is actually how they really make use of AI to really benefit their own employee, benefit their customers. Okay, now so let's go through some conclusions. So they have some opportunities, and first is that they have increased capacity, they have more customers, but they need to fill up the flight as well. And they have strong collaboration with other airlines such as NA and Air Indian. We also have to say the global travel demand is actually recovering, so it's a good sign for Singapore Airlines. And in terms of the risk, actually we can see the pressure on the operating profits, and we also talk about the AI investments kind of uncertain, and then the global economic now you can see the Trump's tariff is affecting everything. Okay, thanks for watching up to now, and then please remember to subscribe to this channel. It's my first time to making such video, and I try my best to keep improving the video contents and the style that I speak. So see you next time. Peace.